High yield income ETF taxes is what we are going to discuss today. I am not an accountant. I have no background or qualifications in this, but I'm going to open your eyes to some shocking developments. And you could either face a huge tax bill, even on money you didn't actually receive, or you can pay no taxes. Let's jump into it. So, for example, last month, I supposedly made $51,000 in dividends. Sounds great, right? But a lot of them I didn't recover. For example, so this was, I guess for January. Oh my God. All right. So XDTE, 1 week paid $4,000. Then Plady, I received a dividend. It looked like it wasn't recovering. So I sold before I recovered. Then it did recover, it did great. I'm in it again. But so that dividend, if it's taken away from my NAV, from my balance, and moved to the bottom as a dividend, if Plady or Palantir does not speed up to recover that amount that is in my dividend, I didn't really get that dividend. They just moved it from the top to the bottom. And if I withdraw it, it's not added money on top of my portfolio. If I didn't recover and I withdraw it, I am taking money from my portfolio. YMAG, okay, not in that no more. XPay, I love it, getting paid. As a matter of fact, XPay, just so you all know, hold on, clear all that. XPay is going ex-dividend, okay, and record date on the 12th. They're going to pay 95 cents, and then it pays out on Thursday. Love it. So all of these, AIYY, I'm not in that no more. SMCY, I'm not in that no more. I never recovered the dividend. But that dividend is a taxable event. That dividend is like you worked. Let's say you did Uber driving. That's a bad example. Let's say you did some part-time work as a secretary and you made $13,777 for the year and you paid no taxes on it. At the end of the year, you're going to owe full taxes on it as if you earned it at a job. And this continues on, okay? And my total for January, and I don't brag about this because I didn't really get it, all right? Except for some of these, like XDT always recovers, and now I've made a move. Anyway, so just for 1 month, that's $51,000 in income tax with no taxes paid on it. That's like having a job, getting a check every week, and never having any taxes taken out. But guess what? I've been doing that for about 10 months. Maybe not that much, but still, okay? So even if it's close to that, that's $511,000 in dividend income that no taxes were paid on, okay? Let's say you got to pay 34%. So $174,000 in taxes. But guess what? A lot of these, there's two types. There's a way not to pay any tax on this, or a tiny fraction. Imagine owing 511 taxes on 511,000 and maybe having to pay 10 or 20,000. Now I'm going to show you how. This is why people subscribe here, for factual strategies over spreadsheet nonsense, because this is my real money. Traditional dividends are taxed as income. They're either ordinary dividends or qualified dividends. I'm not going into that now. All of these are ordinary dividends. They're all taxable. Depending on what fund you're in, you're going to see if you have to pay taxes or not. Now, here's the conundrum. Some of this is called return of capital. There's good return of capital, which is just a classification the fund itself makes to kind of shift. And this is great for taxable accounts. If you don't buy and sell and you just hold and collect the dividends, it shifts all that tax burden to the end when you sell, like a capital gain or loss. It reduces your cost basis. Let me make this simple, okay? Bad return of capital is when a fund overpays you to entice new people to come in with a high yield. That's not good return of capital. There's good return of capital when a fund does it to classify it so you're not taxed as ordinary income. Imagine not paying taxes on $511,000. So how do you find this? Well, Robinhood sends you a 1099. On your 1099, they list your gains and losses, your buys and sells. If you were in, I must have been in like 20 or 30 funds. None of the Form 8973. It's the report of organizational actions affecting basis of securities. Robinhood does not show that. You will have no idea, and the difference is massive. So how do you find this information? It is a logistical nightmare. If you use Robinhood, I don't know about the other exchanges, and please, if anybody has any other solution for this, let me know. The difference is dramatic, okay? So let's just call January a $50,000 month. And there were many months like that, but I'm not here to be in an arms race about how much money it looks like I made, dashboard money. No. And you can be fooled. If you keep putting your money into more and more funds, even if they're eroding, you'll never see the erosion and you'll think your portfolio is growing. Let's jump to it. How do we find what's return of capital? You have to manually go. First of all, you got to find out every fund you were in. Okay? I might have been in 30 funds. Probably they're within 3 websites. So that makes it easier. So you're going to go to the fund, let's say NFLP curve. You're going to go all the way down the page. What you're going to look for, okay, is supplemental tax info. Here is your nightmare. They put out one for every single month. You need to take each one of these documents and give them to your bookkeeper and find out how much of those returns are not taxable and classified as return of capital. If you don't, you are going to pay a massive tax bill because your accountant or bookkeeper may not even be aware of premiums and covered call funds and assume that they are just dividends. This is relatively new. Shadow, are you there? You know what, Shadow, just tell me, does Robinhood show return of capital on the 1099 they send you at year end? Let's see.
No. Robinhood typically does not show return of capital separately on the 1099 for ETFs that pay covered call premiums. The 1099 will typically show the total income, which includes the premium received from covered calls, but the breakdown into ROC may not be detailed in their statements.
Okay.
You may need to refer to the ETF's tax documents or consult a tax professional for more specific information.
All right, so let me show you how this works and how to do it. So let's go to their ETFs on YieldMax. Oh, God, if you were in all of these, you got a lot of work to do. And, I mean, I'm probably going to pay my bookkeeper to do this, but she won't even know where to find it. I'll be the one to know where to find it. So let's say you're in, let's pick something popular, Misty. You made a lot of money, right? Okay, so we're going to go down to the Misty page. We're going to look for tax information. Down here. Supplemental tax. Okay, now, here we go. They have this for every month of every fund. So let's go down to Misty. Now, there's no, Robinhood don't show you this information, and it's critical. Let's just pick a middle of the date, a middle of the year here. All right, so this is August. As of August, all right, so for the month of August, okay, no matter, here you go, hold on. Okay, so you're going to go to the far side. You're going to go down here. Estimated return of capital, 59%, not bad. That means that on 41% of that dividend, you have to pay taxes. Okay? 41% of that dividend, you have to pay taxes. Let's pick another one. That's for 1 month. You need to give all of this to your bookkeeper. Let's pick NVIDIA. You guys love that, right? Pick any 1 month. Okay, let's go down. Check this out. This is terrible. This is really bad. All right, only 23% YieldMax has decided to declare as return of capital. No matter how much they paid you, 23%. That means that 77% of that distribution you have to pay taxes on. Hey, everybody says, I even say, no big deal. If you're making the money, pay the taxes. Great, put the money aside. Yeah, I understand. But here's the problem. I told you that many of those funds don't recover their dividends, okay? And many times I left before I recovered. Some of them never recovered. So I never really got that money. Yeah, it was moved from the top of my account to the bottom. But if I didn't recover and didn't really earn it, okay, and then I have to pay tax on it, and especially if the fund keeps going down in value and they're giving me back my own money, but they're not even classifying it as my own money. It's not 100% return of capital, okay? Estimated return of capital for that month out of that distribution was only 23%. All of the yield max funds are like this, okay? They don't care about the NAV. They don't care about your taxes. Let me show you something different, all right? Oh, let's look at Tesla. Tesla should be high return of capital because all they did was give you, oh my God, again. 28% is return of capital. 28% of Tesla is not taxable every month. Even if you lost money, you never recovered, it don't matter. All those dividends you collected, you now have to pay taxes on almost all of it. Okay, I understand. Let's move on to some other funds. So let's say you're in Curve NFLP. Let's pick middle of the year, April. Okay. Now, Curve, it's not paying you your own money back. Actually, if it was paying you your own money back, it wouldn't go up in value. If we look at NFLP, let's put in the word stock so I get the right chart. Here we go. If we look at max time, okay, it's up 49%, up $12 a share, okay? In the last year, it's up $7 a share. Plus, they're paying you nice premiums, 80 cents, whatever it is, okay? But you're not paying taxes on it. Let's take a look. You ready? You ready? So yield max, they screw you on the taxes. If you pick properly, check this out. All right. Estimated return of capital is not 28%. It's 78%. Almost all of it. Almost all of it. So you only pay tax on 22% of that dividend for that month. Let's pick another one. Let's find, hold on. Let's take a look at Amazon AMZP. Okay, so let's go down. Let's find the supplemental tax. Pick a month. Don't pick the last month because that's when they pay you more and that becomes taxable. Let's pick April. 76%. So they average to be tax efficient. 76% on their funds. Okay, that means that you only pay tax on 24%. We look at the yield max funds, you're paying tax on 72%. Only 28% is considered return of capital, and the fund's losing money, reverse splitting, and wrecking you. Same here. And here, this one, for MSTR, they give you 59%. Let's go ahead now and pull up Roundhill. Let's pull up XDTE, right? Round ho. So let's pull this up. And let's go to our ETFs. Now remember, when we look at XDTE, it doesn't NAV erode. It's stable. Okay? Goes up in value over time. Let's go down and find, now you're learning this. No YouTuber has ever shown this. I don't know why. They're all spreadsheet nerds and everything else, and they can't show you this. Right down here, documents, supplemental tax information. Again, if you were in it all year, guess what? You got one for every single month. Okay, 2025. We can take a look. Look, here's 2024. Now, this is all XDTE Roundhill. Let's pull one out. 100% tax-free. Estimated return of capital, 100%. Congratulations, Roundhill. You're not paying us our own money. That's the Bitcoin one. 100% return of capital. Okay? Let's go find another one. Hold on. I was on the right one, so they're all on the same page. All right, so that's the Bitcoin one. The YETH, 100% tax-free. What's this one? Our favorite, XDTE, the original ODTE, not the copycat STD or STDs or whatever Yield Max came out with. All right, so let's take a look. 100% non-taxable income. 18 cents that week. Okay, now let's keep going. Hold on, 100%. And this is not even XPay. XPay is 100% return of capital, even though the fund is growing. Okay? It's how the fund classifies it. So, tell me below, how many funds do you think you are in 2024? That's what I want to know from you. How many funds were you in 2024? Then you're going to have to go to every fund, just like I taught you. Rewatch this video because nobody shows you this. And I'm surprised. An immense bunch of nerds out there and dummies, okay, that range from retard on dividends to SoCal Steve-O to the clown Bodian, all of them. The only ones that are smart, and I'm surprised he or his brother has not done it, is Premium Yield Harvest. Great YouTube channel. And I'm No Financial Guru, his brother, Matt. Okay? Anyway, I might have their names mixed up, but those are the channel names. I'm surprised they haven't gone into this in detail like this. So from now on, I'm going to avoid all the yield max funds because I'm inflating now, but it's my last one. I promise you, it's my last one. Because of the capital depletion or erosion. I don't care about the 5-year-old and new ones. I will interview Jay again. I have made an offer for him to come on. I'd like to talk about Plady and all that, some good stuff. But I'm only doing these tax-free ones. Okay, so the curve ones do everything they can to manage, give you a better tax deal. Do you clearly understand? The Roundhill, I didn't even go to XPay. Okay, XPay pays you 95 cents a month, just like XDTE, but it pays you consistent, 20% fund, target like a target 20, right? But if they make more at the end of the year, they're going to pay it out to you. So how great could that be? A promise of a payout, and if they make more, they'll pay it out to you. Well, where's the money come from? The options they have on the S&P 500. Duh. Okay? And if they have to pay you less than what they promise, it's going to come out of your NAV. But hey, that's nothing new. There are companies that do that all the time, right? Companies that do that all the time, so it's not a big deal. And I tell you, I'm going to run Plady up to the dividend, and then I'm probably, I don't know what I'm going to do. This tax news is very bad. I don't care how much money you make. Okay? You have a choice. I explained it all very clearly. I'm not going to overemphasize the point. I need to know from you, how many funds are you in? Did you know about this? Did you know that it's not shown on Robinhood? And if you just give it to your tax person, they're going to think it's ordinary dividends. And you would have to pay full income tax on all of that. When if you just look and pay attention, you can find funds like Roundhill, okay, that are going to give you 100% tax-free premium. Every week, every month, whatever. It's 100%. Consider it. It's the way they classify it. And you know what? They can't classify it all that way, but I tell you, even Curve, okay, does their best, a much better job, okay, at giving you high return of capital without actually giving you your own money back. It's a tax classification. I hope this helped all of you. I am having a dilemma of, do I really want to do all this work for every month myself? Will my bookkeeper know to go to, like if she sees a list that I was in 45 different funds, which sites to go to? Do any of you have a better way to find this out? Because the difference that you will owe in taxes is huge. It could be the difference between owing hundreds of thousands of dollars, in my case, like that you didn't receive really, okay? We're owing almost nothing. Go and find your supplemental tax notices and let me know. Was this helpful? If so, just subscribe. Don't join nothing. Don't buy nothing. I don't want anything. Have a good day.